Steve here with the Wednesday Morning Ledger for April 8th, 2026. The world looks a lot different than it did at the 8 p.m. deadline last night. We have a provisional ceasefire on the wire. Tehran has agreed to reopen the Strait of Hormuz, but don't let the headlines fool you into thinking the risk is gone. While Brent crude is cratering 14% this morning, now trading at $93, gold has actually spiked to nearly $4,800 as the market digests the fine print. The S&P sits at 6616, essentially frozen. Bitcoin is holding its ground above 71,000, serving as a high-speed hedge against a dollar that's feeling the weight of this geopolitical shift. This is a fragmented peace. Israel has made it clear that Lebanon is not part of this deal, and the strikes are continuing. The liquidity we're seeing is reactionary and violent. If you're trading today, you aren't just watching a ticker. You're watching a global realignment. Look at your daily SPX chart. We are coming into the open exactly where we were yesterday, but the technical tension is higher than ever. We are pinned right against that 50-day exponential moving average. For the institutional desks, the goal today is to see if this ceasefire news can finally push us back above the 200-day simple moving average, that white line on your screen. Until we reclaim that structural floor, this is still a bear market rally. Our daily pivot point is 6,600. If the open is a sell the news event and we fail 6,600, the S1 support at 6,550 is going to get tested fast. But the real danger is the red folder news. At 11 a.m. ET, we get the FOMC meeting minutes. The market wants to know if the Fed is still hawkish despite this ceasefire. If those minutes hint at higher rates to combat the residual energy inflation, that 200-day average will become a ceiling that nobody can break. Now look at gold. This chart is defying the peace narrative. Usually a ceasefire sends gold lower, but we are up 3% this morning, trading at $47.98. Why? Because the market doesn't trust the stability of the strait. We are well above the 50-day EMA and the 200-day SMA. This is a parabolic move that is testing the R3 resistance levels. The central pivot is miles below us. When the price gets this far away from the 50-day average, the risk of a snapback is high. But as long as Lebanon is still seeing strikes, the safety bid in gold isn't going anywhere. Do not chase this vertical move. Wait for a regression back to the mean. Brent crude is the bloodbath of the day. We've seen a total collapse of the war premium, with the price dropping from $109 to $93 an hour. It's currently slicing through its moving averages like they aren't even there. If the strait truly opens and those 11 million barrels hit the market, crude is headed back to the $80 handle. Bitcoin, meanwhile, is proving its mettle. It's holding above 71,000, ignoring the oil crash and focusing on the long-term devaluation of fiat currency. It's trading above its daily pivot, signaling that the risk-on appetite is shifting from commodities to digital assets. Watch the 70,000 level. If that holds, the path to all-time highs is wide open. The ceasefire is a relief, but it isn't a resolution. We have FOMC minutes at 11 a.m. and a market that is fundamentally overextended in both directions. Your plan for today is cold-blooded discipline. Take your profits on the crude shorts if you were in them, and don't get married to the gold long at these vertical prices. Stay heavy in domestic energy, because the infrastructure still needs to be rebuilt, and keep your core gold positions. The ledger is moving at warp speed this morning. Stay disciplined, watch your pivots, and I'll see you on the other side. This is Steve.